Hello and welcome to MC Pro Stock of the Day with me, Stacey Pereira. In this segment, we bring you some fundamentally strong stock ideas that you could consider. Today, we've handpicked for you AMI Organics. A quick background about the company. Well, they are manufacturers and intermediates for APIs and NCE, which is your new chemical entities in terms of their innovators. They operate from their plants which are based in Surat, Akileshwar as well as Jagadia. Now, the company gets 60% of its sales from its export business and is a big beneficiary of European companies that outsource advanced intermediates from India. Now, also let's look at AMI Organics' segmental sales breakup. The company makes about 77% of its sales from its advanced intermediates, whereas 23% comes from its specialty chemicals business. As for the stock's performance, that has significantly consolidated in the last 8 months on account of those growth headwinds. We saw that in Q3, the growth weighed in on the stock due to the adverse demand-supply dynamics. We did see that specialty chemicals business, whereas it grew at 49% on a year-on-year basis, it now constitutes to approximately 23% of their sales. But the advanced intermediate growth was quite flattish. Overall sales growth was only at about 9% on a year-on-year basis, which was much lower than expectations. In fact, the top line was dragged by that lower pricing due to the dumping that we saw from China. The company did report better margins due to that lower raw material costs. As for the growth guidance, the management has lowered that for FY24. They've lowered that top line growth guidance to just about 15 to 18%. This on account of that weaker chemical prices. They're also quite afraid of the Red Sea crisis that is ongoing and see that as a threat as it could pose a logistical challenge for the exporter. It has delayed its shipment schedule and is likely to also weigh in on their margins in the near term. So what then makes us so constructive about the stock? For one, in FY25, it is likely to witness a rebound in their top line growth. The management expects 17 to 22% top line growth in FY25. They are also looking to ramp up the new Akileshwar unit, which could go on to contribute quite significantly. This unit would primarily then execute the multi-year contracts they have for Fermion. It also plans to produce intermediates having an application for the patented APIs. Secondly, the company has also planned to roll out a host of new product launches. The company is looking to develop applications for paints, polymers and also the electronics industry. Another factor that could go on to work in favor of the company is the traction that it has got for products having applications in the semiconductor industry, which they have received so far. The subsidiary Baba Fine Chemicals deals with that niche of photo-resistant chemicals, which it is seeing quite a bit of increased demand of late. The company has also forayed into the electrolyte business. It has signed an MOU with a global client for manufacturing electrolytes for battery cells. It also plans to invest about 300 crore rupees to set up a dedicated manufacturing facility for electrolytes. And this opportunity is in addition to the electrolyte additives business, which is meant for lithium-ion batteries. As for this, the samples have already been approved by 6 of their customers and the company is now just awaiting more clarity. But if all of this goes through, it would provide an exposure to the energy storage theme for the company. As for the valuations, those will be supported by high growth phase and the stock is trading at a valuation of 18 times its EV to EBITDA for FY26 estimates, and it expects its FY25 to see a setup in that earnings growth. But are there any near-term factors that you need to be concerned about? Well, the China's dumping into India can lead to a weaker pricing for the overall chemicals business and this chemical player too. With that, it's a wrap. Thanks so much for watching.